precious metals for more than just inflation. Featuring Monex and the world-renowned commodities research firm, the CPM Group, led by Jeffrey M. Christian.
Hello, my name is Sean Brazney, Sales Director for Monex Deposit Company. I'm here again with Jeffrey Christian, Managing Partner and founder of CPM Group, one of the many analysts over there at CPM Group. Thank you very much for joining us again today, Jeffrey.
Always a pleasure to be with Monex.
Yeah, and again, we're in our report this year for precious metals for more than just inflation, and getting a chance to talk to you about some of the recent activity we've seen in the marketplace. But one of the things I read in one of our reports at the very beginning of the year, which some viewers and readers might look at and kind of scratch their head at, and you mentioned that you expected gold to outperform silver. And man, we've seen this war launched, and sure enough, that's held true. Gold hit a record-setting high number yesterday, and silver traded to a high of about $27.50, which really it's been trading between 22 and 28 for a good portion of about a year and a half, and not quite off to higher highs yet. But it is holding true that gold seems to be outperforming silver. I'd like to just update our viewers and our listeners as to what got you to make that call, and do you think that'll continue?
Silver has actually performed well the last couple of days and has been playing kind of catch up. But prior to the actual Russian invasion, gold has been outperforming silver, and our expectation is that it'll continue to. And in order to explain that, let me try to succinctly say, I put out a tweet Monday, I believe, saying that investors need to be able to discriminate between longer-term cyclical and secular shifts and short-term event-driven spikes up and down in prices. And both are present in the gold and silver markets right now. And our view that gold will outperform silver is predicated on those longer-term cyclical and secular shifts. More investors in more parts of the world focus on gold as an inflation hedge and a currency hedge, and all of those factors are in there right now. Some people, especially in North America and parts of Asia, will focus on silver too, but gold is more universally seen as a currency and inflation hedge. So what we were saying and what we continue to expect is that gold will outperform silver because more people are flocking to gold than they are to silver right now, just on a global basis.
Yeah, and I like to bring this up because so many of the investors I talk to, kind of gravitate towards, some of those myths in the marketplace that, gold goes up, dollar goes down. Yesterday we saw gold tapping a historic high and the dollar way up over 99. And today we've seen almost an $80, $90 correction in gold, and the dollar is also down over a full basis point. But that can also be true with the attachment to gold and silver. I think if gold's going to go up, then silver's got to go up with it. Although we can see that tide, kind of as the tide that rises all boats. But it's great to have your reports and to remind our viewers that that's why we try to provide all this information for you, so that you can get away from some of those myths in the marketplace. And another topic being the trade deficit. I know we don't really talk about it a lot. Might be a kind of a snoozer, but that trade deficit jumped by another $26 billion just in the last 3 months, going from December to today. And I thought it was an important point to bring up because it doesn't that still show we're pretty much still a nation of consuming in debt and not necessarily a savings kind of a scenario?
On certain economic levels, the trade deficit is very worrisome and problematic. On a long-term basis, it's better to be an investor than a consumer, but the United States as a country and the individuals that make up that country, we're consumers rather than investors. And one of the things that you've seen is we've been consuming foreign-made goods more and more. Now, that hasn't really had a negative effect on the dollar because there's an offset there. But, from a long-term economic perspective, we ought to be saying to ourselves we should invest more in our own country as opposed to buying manufactured products consumed elsewhere. But what happens that keeps the dollar higher, and the dollar is 30% higher than it was in 2011. For all those guys out there saying that the dollar is in fact collapsing, it's 30% higher than it was a decade ago. So it's not collapsing. And the trade deficit hasn't really had a negative impact because the U.S. has so many strengths relative to other parts of the world that foreign investors want to invest in our companies, in our equities, in our real estate, in our land, and in the United States. We just have a greater productivity, we have greater natural resources, we have a stronger rule of law. And so as we have these massive trade deficits, $26 billion, in the most recent month, those dollars come back as investments. So foreigners are doing the investment in America that Americans aren't doing, and that's keeping our economy humming and stronger and growing. And it's a self-feeding type of thing. So the trade deficit, as you said, it hasn't really, people don't see a $26 billion jump in the trade deficit and get worried because there's this offset. Sooner or later, we have to deal with it, but it's later rather than sooner.
And getting to some of the recent volatility we've seen just over the last couple of days, and like I said, with gold, you're making a $80, $90 jump, only to give that back, and silver was up about $1.50 or so, and has given up about $1.20 or so of that back today. You'd think the war is over, but when you really think about oil down $15 today with some of its volatility, this pullback, from a technical perspective, it looks like it may be retesting some of its recent breakout. Do you see this as a short-term buying opportunity?
Short-term investors should look at the sell-off today as a short-term buying opportunity. If you're a longer-term investor, you may want to wait. Yeah, oil prices have come down $12 or so from their peak earlier in the week, but they're at $120. That's 50% higher than they were when they were $80 at the beginning of the year. So oil prices, gold prices, silver prices are all still very high from a longer-term perspective. But from a short-term perspective, this is a buying opportunity. Until either the war is over or there is a clearly identifiable path toward a resolution that the public can see, one should be long oil, gold, silver, because the war is going on and it's not over, and it's probably going to get pretty nasty in the next couple of weeks, according to intelligence sources in the United States and Europe.
And along with those reports that we're reading, and reminding our viewers and our listeners that, again, that's what we hope to provide for you in these reports, reports from CPM Group that we rely on so heavily. When you get a chance, call Monex today. Talk to an account representative and get the most recent report for precious metals for more than just inflation.